Hello and welcome to the RICS World Built Environment Forum webinar series. My name's Simon Rubinson, and today over the next hour we'll be looking at how the construction industry is going to weather the economic downturn that is being experienced by much of the world. We will also look at perhaps some of the more fundamental and structural issues surrounding the construction industry. We will do this with a real excellent panel, and I will introduce the panelists shortly. But before I do that, each quarter, RICS runs a sentiment survey, a global sentiment survey amongst RICS members, just gauging their insights and their feedback around developments in the sector. And I wanted to ask our senior economist, Tarrant Parsons, just to summarise very quickly what were the key conclusions of the Q3 survey.
Yes, so thank you, Simon, and hello to everyone joining the webinar today. As Simon said, for my part, I just want to share some of the highlights of the latest survey results, really to kind of set the scene or provide a bit of context ahead of the panelist discussion. Obviously, this survey comes against the backdrop of weakening economic conditions, or at least the outlook for economies across many parts of the world appears a lot more challenging. Certainly, there's a lot more caution. Interest rates are rising quite firmly. We've seen rate hikes from both the Bank of England and the US Federal Reserve this week, and yet still rates seem set to rise further from here. So I think it's useful to assess how much of an impact this is having on construction activity at this stage, as well as to look at how this is all expected to affect the market over the year ahead. And our sentiment surveys, I think, do offer a great way to get some kind of leading insight into the likely future direction of travel, given many of the indicators are forward-looking in nature. So I think with that being said, a good place to start here is to look at recent trends in our survey feedback at a broad global and regional level. So displayed here is our headline measure, the Construction Activity Index, which we like to use as a bit of a summary statistic. It incorporates variables on workloads across all of the sectors that we cover. And as you can see, in most cases, the Q3 readings are a little bit softer, somewhat weaker than in Q2, certainly down on where they were at the beginning of the year, but in some cases still holding up quite well. So from the global perspective, the latest reading moved into what we describe as neutral territory. So that figure came down from 12 in Q2 to +3 in the third quarter. Now this in our estimate is pointing to a generally flat picture at this stage. It's not negative either. The story is that the growth has, largely speaking, lost momentum, but just about remaining kind of positive. Now, the regional dimensions beneath this are quite varied. You've got the weaker end of the scale there. The headline index is now negative in Europe, so that fell from +5 to -10. And that type of reading is one that we would consider consistent with a decline in construction activity now being underway, even though it's at a modest pace at this stage. In Asia Pacific, well, the feedback is also quite subdued in aggregate. But at -1, that latest reading is something we would again describe it as depicting an overall flat or stagnant trend rather than being an outright decline just at this stage. But then if you look across the Americas, our headline index readings there remain quite clearly positive. But I would note that the measure has kind of moderated or eased from, I would say, more buoyant levels before, meaning momentum kind of has been lost. But even so, growth in activity is still, at least for now, being reported in most sectors. And then lastly, really running against the broader global narrative, I would say the Middle East and Africa as a region continues to post some of the more upbeat numbers. So the construction activity index actually ticked up a little further during Q3, and that really leaves the Middle East and Africa as a region as the strongest performer at this point in time, certainly with regards to momentum and the direction of travel. So if we just move on now to focus specifically on the breakdown of our more forward-looking indicators. This next chart displays respondents' expectations for workloads or activity over the coming 12 months across the three broad categories set out here, which includes private residential, private non-residential, and infrastructure. And on the whole, where much of the easing in momentum has occurred is in the private residential sector. So if you go back a few quarters to the start of the year, growth in kind of housing development activity appeared pretty strong and was largely expected to continue in that type of vein. But this has really turned around in the more recent results. I think what's now filtering through more significantly is the impact of rising mortgage rates on housing market activity and also the prospects for house prices. So as you can see from the chart there, private residential workload expectations are virtually flat in both the Americas and Asia Pacific, while they're now slightly negative across Europe. And in each case, sentiment around this sector is much more muted than at the start of 2022. For Europe, in fact, the outlook is now slightly negative across two of those categories, with private non-residential, which of course includes the commercial sector, also expected now to see a decline. And both of those readings, residential and non-residential, have deteriorated from last quarter. And so it does seem that there's some downward momentum building across Europe, where you could argue the broader macro outlook is perhaps the most challenging on a regional comparison at this stage. For the Americas, well, the non-residential sector still displays modestly positive expectations, although I would say that these have been scaled back from the beginning of the year. So the tide does seem to be turning slightly. For Asia Pacific, not much in the way of growth is expected in the non-residential sector. Very flat or subdued expectations for commercial development, at least in aggregate across Asia Pacific. The sector which does seem to still be providing a lot of support to overall growth, in contrast to residential and commercial, is infrastructure. So that's still seen as an area of kind of ongoing strength going forward throughout much of the globe, with expectations still firmly positive across the Americas, Asia Pacific and the Middle East and Africa, even if these projections are not quite as elevated as they were at the start of the year in most cases. But again, looking at the results from that, kind of this perspective, very clearly shows the Middle East and Africa as an outperformer of the global average, with expectations quite upbeat on the prospect for workloads across all three of these categories over the next 12 months. Moving on, if we zoom in now to some of the country level data, here we have displayed the kind of disaggregated construction activity index readings across many of the markets that we cover. And so the purple bars there represent the Q3 data, the latest data, and the triangle markers there showing the previous Q2 readings. So as you can see, there is quite a wide disparity between the top and weakest or poorest performing nations as far as this measure is concerned. So towards the top there, Saudi Arabia, the UAE, two nations where the outlook is very much being supported by higher oil prices. Those two areas come through with very strong results. So as an aside, economic growth is actually forecast to come in around 8% in Saudi Arabia for this year, with oil-based activity up by close to 23%. So that really is supporting the outlook, as I mentioned. And a similar story for the UAE, where overall economic output is on track to register an above a 7% annual rise this year. So it's a very strong economic forecast. Now, OPEC oil production cuts have been agreed last month regarding next year. So it is likely that growth prospects could diminish against some of the large oil producing nations. So perhaps a little bit further ahead, the outlook isn't quite as robust, but as it stands, the near-term outlook does remain very firmly positive. Elsewhere, you could pick out India, that sits towards the top there, very firm, strong conditions being reported. I think away from that top group, many of the remaining markets have seen some degree of easing in this measure between Q2 and Q3, in the cases where the purple bar sits below the relevant marker for Q2. At the weaker end of the range, I think Germany scores pretty poorly here, with really the energy crisis, cost of living pressures, higher interest rates, all combining to really knock confidence across the economy. France, another large European market with this headline measure, is now negative. The UK and the Netherlands have a broadly flat picture coming through, which in itself is much weaker than what was seen before, but still just about clinging on to positive territory. And that profile for activity in the UK is also coming from our survey, also consistent with other data sources. If any of you follow the Purchasing Managers Index, their figures, both sets of figures, show over the quarter output metrics just about hovering above the level that separates expansion from contraction. So it is still positive, but momentum is much softer than before in the UK. But as I mentioned earlier, that narrative of a slowing in the residential sector is really prominent in most European markets covered, and given that beforehand it was actually quite strong, that change is what's really acting to pull down these headline averages for overall construction activity. And then I would just kind of sum up the takeaway from these results this time is that even in the countries where activity is still reportedly rising, so quite resilient in the face of the economic downturn at this stage, I think in most instances it is a lot softer than earlier in the year, and I think the risks going forward are very much skewed to the downside. There is the potential for more negative outcomes to emerge if some of the larger economies across the world fall into recession, as is kind of quite widely expected. If we move on just to show in terms of the factors, the limiting activity that we report on, there hasn't been a great deal of change over recent quarters. So we still have 85% of respondents that report material costs are an impediment to the construction industry. It's unsurprising, of course, but this is all really expected to continue to weigh even further on profit margins in the year to come, again across the vast majority of markets. So really impacting profitability. If you'd want to take a slightly more optimistic angle, you could say that the share of respondents reporting that material costs is an issue has at least eased somewhat from a high of 91% 2 quarters ago. So maybe very tentative or early signs that there may be some easing. What I wouldn't want to get carried away at this stage, but there is other evidence that inflation has at least peaked and is starting to fall back gradually. But then still around 2/3 of our respondents globally report that material availability and labour shortages, skill shortages in particular, are an issue, although again this is slightly down on where we were earlier in the year. I think one factor that is being more widely referenced now as an obstacle, that's around kind of financial constraints. So 71% of our respondents see access to credit as a market kind of hindrance now. That is identical to Q2, but it's up from Q1, and it's up even further from around 61% that were stating this to be an issue at the end of last year. So that's all kind of fitting in with the narrative of higher interest rates from many central banks now feeding through into more generally kind of challenging conditions across a lot of facets of the economy, and that is unfortunately likely to become an increasing headwind going forward. So those are the main takeaways from our global results. On the whole, away from those stronger performing markets in the Middle East and a few other exceptions, I think momentum is fading, still holding up relatively well, it must be said, given how gloomy some of the economic assessments are. But I think the outlook is most challenging in the areas where the economic landscape is probably deteriorating to a greater extent, as you might imagine would be the case. But that's my kind of summary of the results. Pass you back over to Simon now, who I'm sure is keen to get the panelist discussion underway.
Thank you very much for that, Tarrant. And if there are any questions specifically about the survey, I'll come back to you through the course of the discussion. I should add there that we do want it to be in this panel's discussion to be interactive. So we will, I would like to encourage you to submit questions. We've already got 1 or 2. So even though we haven't started the discussion yet, I will come back to the questions once the discussion gets going. But please do start submitting them. And just on the sentiment survey, just so you're aware, we got almost 3,500 responses this quarter. So it is a good quality survey in sense of the reach that we get amongst our ICS members. So I'm encouraged by that, and obviously we want as many people to contribute as possible. So if you are able to in future, please do, or let me know if you want to go on the list to contribute. Now I would like to introduce our panel for today. I'm going to ask them to say a few words about themselves individually, and then we will start the conversation. So first of all, good afternoon, Roland Bechmann.
Hello, everybody. So I'm Roland Bechmann. I'm engineer. So we are at Werner Sobeck. We are an international company of engineers and architects, and we are consulting clients regarding new buildings, but also regarding their portfolios worldwide. So we have branches in many different countries, and so we have a quite good oversight over projects all around the world. My specialty is really the business development, and this is currently, of course, highly linked to sustainable goals or sustainability goals of projects. So this is my personal interest as well.
Okay, thank you very much for that, Roland, and stay up now, and we'll get the conversation going shortly. James Irvin, good afternoon. Well, in fact, good evening, I suspect.
Hi, evening, afternoon, depending on where you are in the world. Yeah, James Irvin. Currently, I'm with Curry & Brown. We're a global construction consultancy. I'm a senior director, and my background professionally is cost management and project management. I've been 10 years in the Middle East and Qatar and KSA markets. Originally set up the Curry & Brown KSA entity back in 2017. So I've seen the rise and progress in the Saudi market, which we'll probably discuss in a bit more detail. And we've now got a team of 140 cost management, project management professionals in Kingdom. So yeah, thanks for inviting me on the panel, and look forward to the discussion.
Thank you very much. Justin Sullivan.
Hi Simon, thank you. Good to see you. So Justin Sullivan, I run a firm called Adair, which is a UK-based construction consultancy, and I'm a quantum expert. That's my speciality. So I deal in a dispute, and I have had experience of the Middle East, Europe, and the UK. And another hat I wear is I chair the Construction Industry Council, which is a UK umbrella body for professional bodies and research establishments. And it's good to be here.
Great, thank you very much, and lovely to have you here. And finally, Scott Wilkinson. I think it's just turned the afternoon, hasn't it, in your part of the world?
It has indeed, yes. We've just come to 20 past 12. So, hi everybody. Thanks, Simon, and great to be here. I'm the Director of Cost Management for the Eastern Region of Canada, and I'm based in Toronto. BTY Global Consultancy, serving clients across the world. We started in Canada and Vancouver 40 years ago, and serving the UK, US, and Canada primarily. So I've been in the industry for over 20 years and started in the UK, moved to New Zealand, and was in New Zealand for 8 years before coming over to Canada. Worked on both the construction contract side as well as consultancy. So we're looking forward to the chat today.
Oh, well, great to have you here as well. So look, can I just start off perhaps just running through your thoughts on, the feedback that that Tarrant presented? I mean, does it really comport with your own experiences? And if we just go through the order that I introduced you. So Roland, I mean, what are you seeing? Obviously, you're most familiar with Germany, and that's a pretty, that's a pretty good indication of what's going to happen in Europe, even if it isn't happening at the moment. So, I mean, what are your thoughts?
Well, at least in the last 2 or 3 weeks, the situation in Germany has gotten worse, I would say. So in terms of mood, how people reflect the current situation, I think this was also visible in Tarrant's figures. So Germany was really the second most negative country there. And yes, so developers feel the increase of interest rates. We have higher costs of construction. And at the same time, we have still very high demands, for example, in terms of residential buildings for municipality requirements, such as how much amount of social housing should be in a project, etc. So overall, it's getting more difficult, I would say. So it's still a lot of projects are going on, but it's definitely getting more difficult, and it's definitely not as easy as it was in the last maybe year or so to develop and to start new projects. So you really got to have now a very good design and a very good financial concept for it. And I'm sure this will make it difficult for some of the players in the next weeks here in Germany.
Okay, thank you. James, just a heads up from you on what you're seeing in Saudi and anywhere else in the Middle East, really.
Yeah, sure. I mean, I guess Tarrant gave a very good overview initially, and obviously the Middle East market is bucking the trend, so to speak. You know, obviously Saudi Arabia is embarking on a real societal change. You know, that has been really driven by the 2030 vision in Saudi, which is looking at diversifying, you know, its revenues away from oil and gas predominantly, but also looking to, you know, bring younger Saudis into the employment market, to open up in terms of tourism within the country. So yeah, I think Taryn touched on it. The GDP in Saudi is up 7.58%, depending on the publications you look at. It's heading towards $1 trillion in terms of GDP annually, mainly driven by a lot of the giga programs that I'm sure is widely publicated, you know, globally. So everything from NEOM, the developments on the Red Sea, Amala, and then obviously the big programs in Riyadh, such as Diriyah Gate and Roshan. So these are all cross-sector, you know, programs linked to housing, social infrastructure, and entertainment and hospitality predominantly. I guess there's been a bit of a slowdown in Qatar, as you can see, but that's predominantly because they're getting match ready, pardon the pun, for the World Cup. And the UAE is still remaining very buoyant, despite, you know, what people were, you know, discussing a few years ago. So you know, I think it's a good time to be in the Middle East. I think it's a mixture, obviously, of the oil price being buoyant, and that's normally the trigger in the Middle East, because that dictates a lot of the spend, and, you know, the wider opening up of the region, and obviously Saudi is the powerhouse, and they are really driving ahead with some, you know, incredible plans. So, you know, it's a good time to be in the Middle East, to be in a growth market. And almost the size of the projects in Saudi could supplement some of the resource that could be, you know, coming free if there is any, albeit, you know, globally there is a skill shortage of consultants and, I guess, supply chains at the moment. So yeah, that's a bit of an overview. So yeah, generally I would concur with Taryn's findings. It wasn't really anything surprising to me being in the Middle East. So yeah.
No, and I've got already a couple of questions for you. I'm going to come back to them in a minute. I just want to run through comments from, first of all, Justin on the UK.
Thanks, Simon. So, I mean, the UK is in an unusual position because we had the hiatus of Brexit in construction, where people were just hesitant to make the steps and commit to a development. And then Brexit happened, but it didn't really happen in the way that was expected. I mean, it was a bit like the millennial bug in 2000. It was a bit of a non-event. So we had a backlog of construction work. We still have a housing shortage. So there's still a programme there which we're not hitting the targets. We're nowhere close to the government's targets on that, and we've got a massive infrastructure programme. So our biggest problem at the moment is resource. So it's material prices going up, labour shortages, and white collar shortage in professional services. You just can't get good people at the moment. But looking forwards, funding is already tightening up. We're seeing that. So lenders are already much more conservative. They're looking at projects where maybe viability isn't as good as it looked before because of the increased cost of servicing debt, and then also maybe the market moving, the housing market moving, commercial market moving. So would you really have built that project before? So we are seeing that tightening, and I think it'll be interesting, Simon, to do this again in Q1, at the end of Q1 next year, to see how that beds in and if it does. But if you were to look at economics, yeah, we've still got demand. We're really, really busy. There's a huge workload ahead of us. And would a recession really affect construction as much? I'm not sure. So my prediction would be not growth next year in construction, but perhaps levelling off and just being where it was. And again, that does seem to confirm the sentiment survey that Taryn showed us, that the UK was sort of in the middle of that, wasn't it, of that curve? So maybe just a bit of a slowdown, but I don't think it's going to go negative. That would buck market forces.
Okay, thank you, Justin. And finally on this round, Scott.
Yeah, so looking at a Canadian perspective, I agree with Tarrant's analysis, and so far as we're seeing a slight softening, but we're still quite buoyant compared to other G7 countries. Vancouver is softening on residential, but infrastructure is kicking in. Calgary is buoyed by the oil and energy market, and Eastern Canada, led by Toronto, there's a significant demand for infrastructure, and there's a massive pipeline of infrastructure coming through from throughout Ontario and Quebec. Energy prices are quite low compared to the rest of G7, so it's attracting a lot of new technology manufacturing into the area, and giga plants and things like that. So there's a lot of things happening. We're looking at a very successful immigration plan, very aggressive over the next 5 years, which will bring a lot more people into the country. So therefore, housing demand is still going to be very much there. The problem we have is it going to be affordable housing? So trying to build in sustainability and affordable housing is a key issue. To do that, we as Justin said, and what you're experiencing in the UK, resource issues is a massive bottleneck at the moment to be able to actually deliver the projects that we need to deliver in the time that we need to deliver them.
Okay, yeah, no, interesting points. And look, I'm going to come back to all of these issues. I'm going to come back to these issues as we move through the rest of the hour. I think someone has pointed this out actually on the questions, and Scott, I think there's a bit of an issue and an echo. Some people are struggling to hear you. I don't know if you can do anything about that, but just that's that. I mean, it's only a bit of an echo, but it's clearly affecting some people. Okay, can I remind everyone that please to use the question function to submit your questions. I've got loads of things I want to discuss, but I'm going to start with a question that's, in fact, two questions that have come in, and they're really going to be for James. So they're about the Middle East, really. So one of them is the role of China in driving these schemes, and to what extent it's playing a role in trying to influence these areas. And the second, and perhaps unrelated perhaps, but the extent to which the economies, I suppose, but also construction is reliant on oil revenues, and to the if, as some commentators suggesting, the oil price does begin to slip back a bit next year, also the move towards renewables, how's that going to, I mean, is this trend in the Middle East and the Gulf, and I take on board these big projects in Saudi, which in fact I wrote an article about, they're really impressive things, but is this going to be is this a sustainable trend?
I'll answer the first one. In terms of the role of China in the Middle East, obviously China can support the Middle East and the projects from a number of facets. I would suggest one could be from a financial sense. They may come involved and act as a funder for some of these big developments. I mean, the plans are very ambitious. If you look at the GDP versus, I think Knight Frank have touted recently that there's over $1 trillion worth of projects being announced since 2019 in Saudi alone. So yeah, from a funding perspective, I think China could become involved and help fund some of these giga programs and have a partnership with Saudi. Obviously, from a labour perspective, the Chinese labour could be used to help build out a lot of these big programs, as well as Chinese contractors. And I also think, given the scarcity of labour that we're talking about around supply chain disruptions globally, that obviously, the Chinese market could provide modular solutions that could be used to facilitate, a number of these developments. So yeah, those are three ways really that China could become involved, certainly within the Middle East. I've worked in the Middle East for a decade, and there has been a number of Chinese contractors supporting, you know, the majority of the countries from the UAE to Qatar to Saudi and Bahrain. So there is ties there already. In terms of the second question, if you could just remind me of that, and then I'll touch on that.
Yeah, it's about the issue of, I suppose, you know, oil prices being sustained at these levels, the likelihood they aren't going to be, and the you know, the potential consequences of that, and I suppose also the shift to renewables and how, you know, the Middle East, these Gulf states will deal with that adjustment and what it means for construction in the area.
Yeah, I mean, the Middle East economy is heavily reliant on, you know, oil revenues at the moment. I mean, that's widely publicised, and obviously due to the global issues, you know, the war in Russia, Ukraine at the moment is obviously priced up, you know, the price of oil per barrel, which is good for those countries which are producing that. I think the whole ethos of the Middle East moving forward is diversification. So that's the whole intention of building out a lot of these programs. So yes, there will be a reliance on the oil price, but there will also be inevitably international investment. And I think that's why Saudi's vision is so important. You know, the whole society is changing. There will be international investment. It's already up. If you read the Saudi Invest, the last few years, there's been a significant move for international companies coming into the region. So yes, in part, I think there is a reliance on the oil to sort of kickstart the market, but I don't think it's a total driver. As an important driver, but I wouldn't say it's life or death.
Okay, thank you. Look, now there's a question's come in, and I'm jumping around a bit on these questions, but this is one that I'm always interested in. And you know, I know that obviously from talking to Justin, it's a big issue here, but I also want to get the view from North America and Europe as well. I think it's probably less of an issue, dare I say it, in the Middle East, but that's really skills, labour, the attraction of the construction industry. I know, Justin, you know, we talked about Brexit and, you know, perhaps, you know, a lot of sort of construction workers deciding to not stay in the UK at that point, and you know that may have contributed to the shortfall. We're also aware in the UK that the construction sector had quite an aging sort of demographic, and a number of, you know, quite a significant share of that group have decided to retire. And you know, I mean, the feedback from this survey goes way beyond the UK. It suggests that there are skills issues pretty much everywhere. So it's not like I don't think it is just a UK problem, but Justin, what do you think? And it's not just about obviously the trades. It's about, you know, we're being told that the project managers, you know, quantity surveyors, pretty much wherever you look, construction seems to have a problem. And I know that there's a bigger issue about, you know, skills, you know, about shortages of labour globally as well at the moment, but construction seems to be enduring there. So any thoughts on that?
Yeah, I do. I mean, the construction in the UK is the biggest industry in the UK. We're 13% of GDP if you include the ancillary sectors. So I mean, if construction slows down, then the economy goes into recession. That's what happens, and it seems to take every government by surprise that's what happens. I mean, well, I think we're on our 13th housing minister in 15 years now. So I really think that the leadership is weak from the UK government on construction. I mean, what do we do about it in the UK? I think the first plan is we pretend that there's nothing wrong and just roll our sleeves up and just get on with it. We'll have a good moan about the weather, have a good moan about the government, drink lots of tea. And then we normally sue everyone. We sue each other for quite a while. And by the time we come to the end of that, we're normally coming out of the slowdown and we're back into building stuff and having fun. But on a serious note, Simon, I think this time around it is different. Okay, there's definitely a more of a skill shortage. But also I think that we're in a different place as a profession. and as a sector. So when we had the global financial crisis in 2007 and 2008, that really took everyone by surprise, because there had not been a significant slowdown or recession for decades. So the people in leadership positions had never dealt with that. They'd been dealing with a climbing market for a long time. So the reactions to that were surprising and perhaps not the best. What we saw quantitative easing, didn't we? We saw government pumping money into the economy to keep it going. But this time round, COVID, for example, that's not what they did. What they did was they were talking about build. So they prioritised construction and pumping money into that. So I think the people that are in leadership positions now, what we're 15 years on, are now were involved back then in a recession. So they saw how it affected and what happens, and also I think people saw, including me, how quickly construction came out of it. So when
But Justin, I mean, do you think the industry has a problem? And I really want to hear then from Roland and Scott the same. Do you think the industry has a problem in attracting talent? I mean, is it not seen as, you know, as appealing as other industries? And what can be done about that? You know, since I've been at RICS, which is not that long, but long enough. I mean, I've heard this sort of story recycled, but things don't seem to change very much. I don't know. So, you know,
you're absolutely right, and this is one of the things that I try and champion in my role at CIC. So I'm actually a director of Considerate Constructors, and that was formed in '95 following the Latham Review in the UK to improve the image of construction. That was its goal. So no, we don't. I mean, if you look at France and you look at the US, a construction worker is, in my mind, treated with way more respect and accolade than one in the UK. I really think we could do this way better. I mean, we're looking at well-being in construction. We don't do this well. They have site canteens serving up fry-ups, you know, with chips and baked beans and sausages and bacon. That's not how other sectors treat their people. I think we can do it way better. I think we need to go in way earlier. Why isn't there a GCSE in the built environment or construction? We're the biggest sector. I mean, I think I've heard there's A-levels coming out in that. Yeah, Simon, we can do this so much better. We can.
Okay. I mean, I am a bit partial to fry-up, so I'm going to have to take a bit of exception to your comment. But
not every day, Simon.
But you know, Justin pointed to, you know, Europe and North America as better examples. I mean, Roland, do you think that's the case in Germany?
Well, maybe slightly better than in the UK, but I think regarding new demands, for example, we have a very high need for refurbishing, energy refurbishment of existing buildings. And for this, there's almost no labor available in Germany, at least no labor which conforms to the high governmental goals. So conforming for new construction, there is enough construction labor, but we do have a shortage in skilled engineers, architects, and so on, and developers. I think there simply the industry is not as attractive maybe as other industries. Plus, we have the shortage almost everywhere currently, so it's difficult to get a hotel room, etc. But especially if we think about the high rates of refurbishments we will need here in Germany and which are seen, this cannot be done with the existing labor, and we are working on new approaches. So we are working on, can we use more artificial intelligence? Can we work with more serial constructions and so on? But this is all ongoing, and we will run into a shortage. Although, of course, as I said, maybe this will level out a little bit with the construction industry slightly slowing down.
Okay, thank you. And what about North America, Scott? I mean, do you sense that, again, Justin sort of implied that people in the industry are held with much more respect? I mean, what do you reckon?
I wish. Can you hear me better now?
I think so, yes. Thank you.
Yeah, excellent. I've switched over to my earphones. So in North America, what I found quite astounding is in Canada, we do not have a recognised quantity surveying degree course here. So trying to get professionals through the education system is quite difficult. And so we work as part of our ICS, we're working with a number of universities to actually help us bring in the next generation. And I think it's a real issue that construction industry as a whole has a reputational issue compared to being an Instagrammer and a social media personality or something exciting, traditional being a doctor or sort of policeman or anything else. So I don't think it's being taught in schools quite as well as what it should be. If you want to be in construction, you either become a bricklayer or a carpenter. That was pretty much the limit, and that is not what construction industry is. There's so many professionals in the industry now, looking at lots of different things. So not only project manager, but risk. There's BIM. There's a lot of exciting technology that's coming into the industry, which we need to really harness. And so all the IT sector, all of a sudden can become quite integrated in how we deliver our projects and become more efficient. And so this leads into new technology and new methods of construction, as well as sustainability. And it's only that leveraging that kind of forward thinking, we will start attracting talent back into the industry.
Yeah, look, that's interesting, and I mean, I think the technology issue, you know, is fascinating, really, and it should be a real driver for, you know, people to want to enter the industry. I mean, hopefully they will see the appeal, but it is a challenge at the moment. I think just looking at the feedback we're getting, I mean, obviously some of the competition may well ease if that slowdown, particularly in the sort of more advanced economies, actually really takes hold, but we'll see. I mean, it's certainly a challenge in London finding people to work in bars and things. I mean, I know that, you know, from talking to people, so big issue.
I think historically the issue with construction is the boom and bust cycle, and it's not seen as a safe career path to go down. Certainly after 2008, scared a lot of people and put a lot of people out of business, and now their children are coming through, and so their parents are guiding the children to go into something else.
Yeah, no, absolutely. I can understand that. Now I'm going to jump around a bit, and we may come back to some of these issues later. But I mean, I've had this question about sustainability, and I wanted to get onto that subject. Now, this is I would view this as slightly provocative, but I'll be interested in your comments. So perhaps we'll start with James, and then is the rate of construction being slowed as a result of green construction statutory requirements for new buildings? And does this make different countries more attractive to developers if the legislation of these countries is less stringent? So I want to move on to some of issues around sustainability, but that's, I think, a fairly provocative start, perhaps. James, what do you think?
I think the way the world's moving, that most countries now are adopting, you know, sustainability. So yeah, there'll be others that are, you know, leading the charge. You know, the Middle East, which a lot of people might not think is driven by sustainability, are looking at sustainable and renewable projects at the moment. Lots of solar power projects, if you look in Qatar and Saudi and the UAE are planned, and even Aramco are looking at renewable energy, etc. You know, the oil reserves will not last forever. So I think that most industries, most businesses now, their whole corporate values and ethics are driven towards sustainability. So I'm not so sure if sustainability is going to delay projects if it's designed in and dealt with, you know, professionally. And you know, I think that's probably a bit of a myth.
Okay, what about Justin, Roland, or Scott? Any thoughts on this? I mean, do you see these sort of statutory requirements as being problematic even in the short term, perhaps, or not?
I would say we don't go far enough. Because adoption is not going to be taken by commercial considerations. So I think it's something that has to be mandated, and then it's built into the ethos and psyche, rather than making it a choice. And so, yeah, I think I've probably gone one step farther than you, Simon, being being controversial in that way.
Yeah, I totally agree with what James and Scott said. So, I mean, we work worldwide, and we don't see that certain countries do not respect sustainability. I think this is a goal for everybody these days. So all governmental clients, but also all larger developers, etc., and investors are looking for this. So in our projects, we don't see lower requirements in the Middle East than we would see them in Germany here. In Germany, there is a discussion going on, which is asking, are we allowed to build at all and in the first place? So this is, of course, a discussion which will have impact on the construction industry, but it's basically only a discussion. So because we still have strong needs from our society regarding housing, but also regarding infrastructure and commercial projects. So I think the solution is really let's move on with the transition of our industry into working and constructing with less carbon and doing it sustainable. And this again links to the discussion we had before. This is something which makes our industry attractive. So currently, I would say we have a very, very attractive or very interesting job role for all of us, because we are really in a process of change, which makes things difficult, but which is also quite nice action and quite nice and kind of really interesting maybe for people coming from universities and so on. So I would rather see that the entire discussion about sustainability is helping us to maybe change things we had to change in the first place anyways, and I don't see that certain countries would disregard it and kind of make profit simply by not respecting the global agreed rules and the global common sense on sustainability.
Yeah, I think, Simon, until you legislate for it, it's not going to happen. I think Scott said that if you're making commercial decisions as a developer, if you can get away without doing it, you will. Yeah, the goal is to make money. I don't think the government takes it seriously in the UK. COP27 is coming up in Egypt. Our Prime Minister's not going. I mean, that says a huge amount.
He's going now.
Is it changed? Oh, sorry, I couldn't keep up. I was looking at our interest rates going up, and us going into the biggest recession since records began. But I think where you've got a situation where you're encouraged to knock buildings down and build new ones because there's no VAT on them, you're always going to have a government that is not going to support this. I mean, if it's legislative work. But something, Simon, that came up in our last construction market forum, I thought was interesting. What they're finding now is funders are looking at sustainability and ESG, because the developers that don't do it are the ones that usually get into problems. So, but the developers that are doing it are more successful. So they're now looking at metrics on that. And unsurprisingly, Simon, I'm going to bring this down to, if you can't measure something, you can't manage it. So people talk about sustainability and carbon embodiment, but how do you measure it? And of course, ICMS, that's the answer to that. We actually had a call this afternoon and this morning, and we have institutions from all over the world. So if you can measure it and report on it and name and shame, or actually show that life cycle costing for your building, Mr. Leisure Centre owner or hospital owner, you are actually going to save money by doing this, I think is more of a persuasive argument.
Look, you just raised the point, because I was going to blend two questions together, and please keep sending them in, because even if we don't get round to them today, we're going to ask our panelists when they get a moment if they can respond to them separately afterwards. Whether they do is another matter, but because we know they're very busy people. But keep firing in the questions, and we'll try and get to as many as possible. But I had written this down, and you mentioned about sort of measurement. You know, in the Q2 survey that we ran, around over 50% of respondents, and I'm sorry I'm reading this once I wanted to get it right, over 50% of respondents told us that they didn't measure embodied carbon on projects. and that we were trying to establish what the principal barriers were. Well, I suppose lack of tools, standards, benchmarks all came up. I mean, Scott, you're nodding your head. What do you think on that then?
I think it's a bit of a wild west, and it's a very new term, and not a lot of people are fully understanding what embodied carbon is, and how to actually incorporate it into their business plan. They know it could be a good selling point at the end of the day, and I think having LEED or BREEAM ratings it sort of simplifies that a little bit, but definitely being able to measure consistently, if you're looking at a project in UK against a project in Canada, are they working to the same parameters? And I think the ICMS provides that framework. I think there's still some way to go of how we can get that information more easily. And ingrain it into both the architects and engineers of how they select their materials and everything else. Certainly here in Canada, we don't want to be shipping stone from Italy if we can get it locally. And so your embodied carbon is a big issue.
Yeah. And Roland, what about anything from Europe or Germany?
I would tend to agree again. So I don't think there are issues with how to calculate it. We all know this. I mean, there is currently no need to do it if you are not interested in it for yourself. But at least in Germany, this will change quite quickly, because the funding for new projects starting sometime around next March will depend on the embodied carbon. And this is when everybody will jump on this at the latest. So this will happen. And but I think we have the issue that we are so fragmented that architects and engineers can design something, but then again we need the construction companies to rule the material chain, and this is something which is, at least in Germany currently, very, very difficult to really establish new rules, how we play together, because basically this was done on we simply have our specifications, and we will find someone who provides the material with the cheapest price, and this system doesn't work anymore with the new ways of construction we have to face. So this is something which will waken up the industry here a lot.
Yeah, I mean, I've had just a bit of feedback, Justin. Someone said here, I totally disagree with you. I'm a developer. I'm putting in sustainable energy sources because it will attract tenants rather than because I'm told by a regulation. No name mentioned.
Okay, I mean, I would love to have that in writing. So look, it is happening, Simon. I mean, it needs to be led from the top. It needs to be government. So interestingly, Infrastructure Australia have mandated ICMS on all of their projects. So ICMS 3 is carbon. So it is happening. I was just being very cynical about the UK situation. In my experience on projects, first of all, getting the decision makers in the room early enough rarely happens. Often design decisions have been already made. We've already got the concrete frame. We won't look at steel frame. We've designed it. But when you face the client with the options on ground source heat pumps versus not using them, and it complies with legislation not using them, and they say, well, we want it. It was okay, well, it's going to cost, say, 100K, and they say, what's the payback? You say 50 years. They don't do it. Yeah, they don't do it because it's too expensive, or it's not too expensive. They have the money, but they'd rather spend the money elsewhere. So it's still, I think it is happening, but it's quite slow. But it's encouraging seeing it. I mean, Scott, Infrastructure Ontario were the first government department to take up ICMS, which is great. It is happening, but we had a round table with the Canadians recently, or last year, and we asked them, do you measure carbon? No, was the answer. But we think we should, but they're not sure why they should. What are you going to do with that information? Would you like to have the data from New Zealand on their carbon content in their projects? Yes, they'd like that. But then you ask, would you share your data with New Zealand? They said no. So yeah, it's. I think we're on the journey, but it's, Simon. I'm a cynic. Sorry, Roland. I'm sure you do it because you get more customers, but it's going way slow.
It's all about the value proposition to the clients of what is their goal for their projects. What do they want to achieve? And if a sustainable goal is high up and they can get the return on investment on it, then they will go for it 100%. So I applaud those that do that. Absolutely.
So do you think, I mean, it ties in with another question, and perhaps James, I don't know what you think, but someone pointed to some Knight Frank research showing that, there is a benefit in sort of going down this ESG route in terms of value, but as everyone does it, some of that advantage will dissipate, and that as a result it'll be hard to sustain the benefit.
I think it's a hot topic at the moment, and yeah, a lot of big businesses obviously promote ESG, diversity. Some of them actually live and breathe the values, and some of them actually just report that they're doing it, probably out of fear that if they're not doing it, that they're seen to be, not caring for the environment or the wider society. I think as professionals, I think we're our developers, we're our clients, government side or private side, we've all got a responsibility moving forward to leave the world in a better place than what we've got in at the moment. So yeah, it's ESG is a hot topic because it's important, but I tend to agree with Justin in some respect. We're on the journey. I don't think we were speaking about this 20 years ago, really, when I entered the industry, but it's certainly something that has been spoke about at the moment. But yeah, there's certainly businesses that live and care about the ESG, and there's others that I would say jump on the bandwagon, maybe for fear of being seen in a not reflective light if they're not promoting the ESG.
Yeah, no, I've got a couple more questions, but we're running out of time. So one of them that was submitted, one question that was submitted is, how is the industry dealing with the issue of leftovers? I think by that I would view it as stranded assets, or the ones that aren't going to be able to be meet that sort of requirement of green buildings going forward, a green building. So that's one question. The other question I've got is, we asked about, I read so many reports about productivity in the sector, and whether you believe it or not, the received wisdom is that the sector performs poorly on productivity. And we asked that question in the latest survey, and I'm just interested if you've got not a silver bullet, because who knows, more than one thing, but if you were to pick one thing that you think could help really boost productivity and give and I suppose that's part of an image thing as well, but it just give that sector a lift and make it sort of seen as being even bigger contributor to economic activity. And I take on board your point, Justin. What would it be? So could we quickly run through those two questions, because I'm going to have to close up pretty quickly now. Let's start with Roland.
Oh, I don't think that there's really one answer. I think we have to stick with the path which we are on. So I think we have to stick with supporting sustainable projects. And I think if we find a good system for funding them also and so on, this will boost the economy if we have a clear guidance on this, the construction economy. I think one problem is really that no one really knows where are we heading with our goals, and we need the governments to support them. This would be my answer, I guess.
Okay, thank you. And on productivity?
On productivity, we have to work with more elements. We have to reuse used elements, and we really have to change our way of constructing and do more serial constructions.
Okay, thank you. Okay, Scott?
Yeah, I would go one step further and go modular construction and take a lead out of manufacturing and how we can really reduce the amount of resources that we need actual on site, build safely in factories, and then modular construction on site. It could lend itself to a multitude of things, but yeah, I think that's one part of the solution, but there's a lot more that's needed.
Okay, thank you very much. Justin?
So just quickly, I would say well-being. We've got a really high rate of suicide in construction and depression. I think, again, nice, good food, yeah, increases productivity, not eating rubbish food, keeping an eye on your sugar intake, and seeing how people are, checking in with them. And I haven't got a clue what to do with the leftovers. Are you talking about leftovers food? Maybe don't eat them.
And finally, James?
Yeah, I'd reiterate what Scott said in terms of innovation and in terms of modular construction, and that's got different strands, obviously massively important in terms of productivity, but we touched on sustainability, and that's a big factor there. You know, reduce waste, reduce carbon footprint, and then obviously what Justin's saying, looking at well-being, you know, treating staff properly, proper working conditions, you know, proper training, making it attractive to come into the industry, and then obviously management as well. You know, trying to get the best out of you know, the operatives, whether that be, you know, guys on site or professionals as well. So yeah, that's my sort of takeaways on it.
Right, well look, I mean, we really are out of time, and I had loads more questions, and we had loads submitted, and I had loads written down, and I really found the session really interesting. So I wanted to thank you for all your contributions. Also thanking Tarrant for starting the panel session off with your interpretation of the results of the Global Commercial Property Monitor, which, as I say, has been released today, and you can find on the website if you're interested. So, I mean, I really just now want to close up by sort of reminding you that we're going to be publishing a recording of, and indeed a written summary of this webinar. You know, we obviously want you to share this with your professional networks if you're able to do that. And we will try and get back to you on some of these questions, which I mentioned earlier, were unanswered. When we finish, there will be an online poll just trying to get your feedback on the webinar. So if you have got a few minutes, it would be really appreciated if you are able to complete that. And you know, if you do check the website for further details of other webinars, we'd also be really grateful, because you know we would want to make sure that you're aware of what's happening, what RICS is offering, and the content. And you know, obviously, if you enjoyed today, then and found it useful, then you may find other webinars attractive or appealing as well. I want to give you a quick an advert for WBEF Week 2023. That's when the Well-Built Environment Forum will be celebrating, as it puts it, the latest and best thinking from across the built and natural environment. But it's a week-long schedule, and there's going to be lots of interesting discussions focusing on some of the latest innovations, practices, and case studies for delivering indeed what we've just been talking about, sustainable and equitable places and spaces. And it will bring together a global network of senior professionals, industry leaders and policymakers. So you'll see some very high profile people talking at those events, and there'll be some live interactive sessions and panels and meetings, and as well, it will be streamed. It will be tailored to regional audiences. So, I mean, I think the whole, and in fact, I should add, the main program will be recorded, so there will be an opportunity to pick it up on demand. But do look out for that, because it promises to be a really interesting week. Obviously, I mean, I'm going to remind you about the socials here. You can always follow us on Twitter and LinkedIn, and there you will get that news of upcoming webinars. So it's perhaps easier to do it that way than going to the website. You'll also find some recently published articles, and we hope to really get the flow of those going again in the new year. So you'll see a lot of interesting comment coming up. That just leaves me to really say goodbye to everyone. Thank you so much for dialing in, and look forward to seeing you next time. Thank you very much.
Thanks all. Have a great day.